With Bitcoin's BTC value rising quickly, crypto investors should have a backup plan for their winnings. Wise investors realize they shouldn't hold cryptocurrencies too long to avoid a huge correction. Always have a plan for what to do following a huge crypto win. A car or other luxury purchase may be justifiable to some extent. Cars, luxury luggage, apparel, etc. devalue over time. Instead of spending all your cryptocurrency earnings on deteriorating things, reinvest them. After a huge crypto triumph, forethought and preparation can help reinvest profits for a bigger return later. Successful crypto traders know when to join and exit markets to maximize earnings and cut losses. Given market unpredictability, a trader's decisions can affect profit or how much they lose. Bitcoin went from $3.967 to $19.901 in a few months. Altcoins rise with Bitcoin, giving investors big gains. Know when to take profits. Hit that subscribe button now for more information. Some traders lost by being greedy and expecting another 10x increase. Have a crypto profit, taking strategy and reinvestment choices for when the bull run stops. A bear market usually follows a bull market. How to reinvest cryptocurrency profits. When to collect crypto profits. When to take profits requires strategy and discipline. It means you've made money. It can be challenging without a clear plan for your earnings. Profiting is challenging. You're asking if this profit is enough. More is better categorically. Know when to stop trading to avoid losses. Knowing how to invest crypto income needs research and good decision making. Rental property investment. Investing your trading winnings in rental homes is another attractive option. With the correct property, you can earn passive income from crypto trading. You can preserve rental income to reinvest in crypto during the next bull run. With the appropriate experts and enough research, real estate is one of the most reliable and rewarding investments you can do with crypto money. Stock dividends. Dividend stocks are fantastic investments. You may decide real estate rents aren't for you or wish to diversify your crypto assets. Apple and Microsoft are computer giants that pay monthly dividends. With a dividend plan, stockholders might get monthly income. Save profits. Finally, traders put earnings in coins to protect their funds from everyday trading dangers. If you can exchange 2 BTC for 2.4 BTC, you can send the remaining 0.4 BTC to a cold storage wallet. The money might be invested with other savings. HODL. Someone misspelled hold in a crypto forum, and some thought it meant hold on for dear life. It means both in crypto. Taking profits versus retaining Bitcoin depends on your portfolio and goal. HODL is useful if you have a large portfolio that won't be sold soon. You can stake your holdings to grow your money, especially if your coin is reliable and lucrative, like Ether. Ethereum will soon transition to a POS paradigm, and investors expect greater performance in downturn markets because crypto holders can stake ETH. Holding Bitcoin throughout a down market is a reasonable alternative because you'll be carrying the same bag, even if your fiat investment diminishes. Donate. Donating crypto can help a charity, church, food bank, or cause. The Giving block helps nonprofits accept cryptocurrency payments. Donating crypto is tax deductible and can offset losses. Crypto donations benefit others and reduce tax obligations. Donating crypto to nonprofits will save you capital gains tax. Tax accountant. After earning a lot from Bitcoin, pay your taxes. In the US, the IRS has warned over 10,000 crypto holders to pay taxes or make repairs. Avoiding taxes might cost you money in penalties. Criminal prosecution could result from unpaid crypto taxes. Our videos explains how cryptocurrency is invested. Hit that subscribe button now and learn more about crypto with our videos. Pay bills. Profits may tempt you to buy something new. Pay off any debts first. You can spend your profits as you like. Pay credit card debts and other bills before splurging. You'll know how much you have left after paying off everything. You can reinvest some and spend the rest as you please. Plus, Not paying your bills when you can is like handing banks free money. By not paying on time, they might penalize you and charge you late fees. How do I know when to take profits? Why did I purchase this coin? Unlike equities, a cryptocurrency's value rests on public opinion. Investors buy stocks based on valuation or technical research. With crypto, it's like investing in a group that believes a certain cryptocurrency is valuable. Before buying a coin, one should have a reason beyond the excitement or delight. Depending on market conditions, you can stick with Bitcoin if you bought it as a long-term investment. If you fear a bear market, you can take profits. You may invest money elsewhere and re-enter the market later. Okay. If you bought a coin because it had a cool name or was trendy at the time, reassess your investment strategy. If you don't see a long-term future or value, you can reinvest your profits elsewhere. I want what? Every trader wants to profit. How much profit is enough? Are you willing to risk everything and possibly lose because you'll get it back tenfold? Crypto is difficult to predict because you don't know how the coin will behave. You might regret selling if the price keeps rising after you do. Crypto prices can rise or fall regardless of past data, thus it's hard to say. What should traders do? Focusing on your profits is usually the key. Risk tolerance affects people's preferences. Most traders target 50% before taking profits. You can seek 100% earnings before taking. Higher percentages are possible. Depends on your risk tolerance. When your investment reaches 100%, it's enticing to see where it goes, or even way beyond. This is fragile ground that could risk your investment. If you can handle extreme volatility, go ahead. Otherwise, have a specific proportion in mind to signify when you'll take your profits. Better chance? Investing is about timing opportunities. If you locate a better investment, take your crypto gains. Ask yourself if you're willing to reinvest your money. Remember the opportunity cost of option 1 versus option 2. It could also provide light on another hazardous Bitcoin trait: volatility. Consider that you'll lose your crypto's potential gains and ask if you're willing to risk it. This applies to multi-investors. If you'd rather invest your time and money in another opportunity, new or present, assess the pros and downsides. Crypto gains without selling. How to secure crypto profits. Most crypto traders withdraw at the first hint of problems to earn a profit. Other ways to benefit from Bitcoin without selling include crowdsourcing. Peer-to-peer (P2P) lending is a safe way to invest and earn a constant return. This is important if your wallet has a lot of crypto. P2P crypto lending relies heavily on Ethereum's smart contracts. P2P lending lets you loan your crypto for a 10% to 20% return. On Maker, developers and business owners can borrow ETH without selling their crypto assets. Arbitrage. Price swings between exchanges are common because the crypto sector is unregulated. Arbitrage can help crypto holders make extra money. Arbitrage in crypto is a way to profit from price differences between exchanges. First, research a currency's pricing on several exchanges. Some exchanges have cheap deals. Take it cheaply and sell it at a higher priced exchange. The price difference will be your profit. Discount and premium prices can vary from 5–40%. When considering taking crypto earnings, ask yourself some or all of the above questions. Before you leave, be sure to click the subscribe button if you like this video and want to see more from us. See you in the next video.